we think the biggest regulatory changes are going to happen because SEC Chairman Gensler is going. He's announced he's leaving on January 20th. So the digital asset world, we think, is now about to take off and thrive.
In this Aaron Vest interview with Cathie Wood, we discuss three key topics: how deregulation and government efficiency drive innovation, the emerging multi-omics revolution in healthcare, and the impact of Bitcoin surpassing $98,000 as institutional adoption and regulatory clarity grow. Stay tuned for Cathie Wood's insights on how these trends will shape global growth, healthcare, and the future of assets. Don't forget to like, subscribe, and share for the latest updates and crypto news.
Of that, because large companies have not felt any pressure, competitive or otherwise, because of the regulatory stance of Lina Khan and others out there, to investigate new technologies, actually buy companies, and establish a price. These are strategic buys, and they telegraph to the world how much innovation is worth from a strategic point of view. Well, we haven't seen a lot of that. There's been a dearth of it, and we think that's going to change. So we're going to have a lot of price discovery. And we know also that at the Department of Justice, President Trump is bringing in people who are very pro-competition, and they are looking at sort of quasi-monopolies out there as being not so healthy for growth in the US and global economy. So I think we're going to see a lot of freeing up and a lot of M&A. There's pent-up demand for it. Then we've got health and human services, and I did talk about this the last time, this concept, the three planks that the new, I will call them health czars, are going to follow. So they say, rooting out corruption. There are lots of payments in the healthcare ecosystem that should not, they're misplaced, mistaken, and should not be made. So they're certainly going to go after that. I think from our point of view, the two other planks are even more important. One is bringing science-based evidence into healthcare decision-making and into healthcare, drug discovery. So that is definitely plays into what we are calling the multi-omics revolution, and will help speed it up. And then the other one is moving away from this focus on, treating chronic diseases into a period where encouraging wellness and curing disease become the primary ways of controlling chronic disease. So again, this is the multi-omics revolution, and we're very excited about it. We'll see a lot of price discovery now that large cap pharma and biotech feel more free to make acquisitions in these areas because they really need the expertise that has evolved as the multi-omics revolution has been taking off. And now they'll have the freedom from a regulatory point of view to do more of it. The last thing I'll say on fiscal policy before heading into the charts and going into the rest of it is there is a lot of concern, and we have received the question about deficits and government spending and the role that they play in inflation. And one of the things I'd like to illustrate with the charts is that deficits or government spending has to be funded. That monetary policy has to accommodate government spending, or if it does not, then government spending crowds out the private sector. So I think a lot of this inflation risk concern needs to incorporate this idea that monetary policy is very important as to whether government spending and deficits result in inflation. And if monetary policy is willy-nilly and just is accommodating everything, then yes, inflation will be a likely outcome. But if monetary policy is not supporting government spending and is restrictive, as Jay Powell, we think, correctly identifies it or describes it now, then what happens is government spending really crowds out the private sector.
Cathie Wood highlights how deregulation and efficient government operations drive rapid innovation. We also explore the multi-omics revolution in healthcare, shifting from chronic treatment to proactive wellness, and discuss Bitcoin's rise past $98,000, reshaping global finance and portfolio strategies.
I think when we throw out there our growth expectations for the globe, and I'll get into this in a little bit, many people, when we throw out a number, they're thinking about life as we know it now. And to many, that's kind of the physical world on Earth. But we're moving more and more into the digital world. We think in many categories, consumption in the digital world will be higher than consumption in the physical world. And the other increment to growth, and again, that people cannot imagine now, is this new world, the universe. Certainly the moon and Mars and beyond. So I think that is what this new age is going to unleash, is opening up many more minds to the opportunities, and giving us the privilege and opportunity to do the kind of analysis we do to help people understand how their lives are going to change and how important it will be to be on the right side of change, because these opportunities are enormous. So thank you, Sam. This is one of the biggest opportunities out there, certainly early stage, but we'll be here before we know it, and we'll be here before most people thought, even 5 years ago.
Absolutely.
In 2 years, we all know about Elon's timing here. He's very optimistic, but for a reason. When he sets out a goal like that in 2 years, who is he communicating to? It's not just to those of us who are reading about breakthroughs. It is to his employee base, and importantly, supplier base and the government sector, including regulators. So it's a big message, and maybe it's not 2 years, even though I think he truly believes it is 2 years and feels like he's now in a situation to make that a reality with fewer regulatory roadblocks. But it is much sooner, I think, than anyone thought, maybe even 2 years ago. All right, so now we will go into the balance, the usual drill on Employment Friday. So starting with fiscal policy, and with the election, before this moment in time, I was talking about, gridlock, nothing's going to happen. Now, with the results of the election, we can see a lot of changes. And I think the biggest one, and what we just illustrated with nuclear power, is regulations, getting regulations out of the way. We obviously need regulations for the safety and well-being of individuals and so forth, and absolutely agree with that. But the regulatory environment is a morass now. I mean, when you put people in positions as regulators and they start building their empires, you get more and more regulations, and it's really had a stranglehold on businesses, especially small and medium businesses. So we think those shackles are going to come off. Despite this very close correlation, a high correlation between this measure of metals to gold and interest rates, since the 08-09 crisis, we've seen a breakdown of the relationship recently. And we think it will re-engage, and the truth will be somewhere in between. We'll need to see some cyclical dynamic here. And as I mentioned, it's important that the president and his team make very clear, when these incentives, tax cuts, regulations coming down, and others are going to kick in, because if they're not going to kick in anytime soon, we could see a lot more cyclical weakness. But if they're going to be retroactive and will kick in rapidly, okay, now we're talking. And we think if that's true, this purple line will start going up. The combination of metals prices going up, maybe the gold price going down, because gold price going up has been a flight to safety in a very uncertain period. And maybe we'll get interest rates down a little bit more. But if we go back to the long-term history of interest rates here, you'll see that the decline, the secular decline, was from very high levels and was a very good thing until it wasn't, because here at 2020 and 2020, what the long-term interest rate was discounting was the possibility of an outright global depression, a deflationary bust associated with COVID. That would not have been good. And so where will equilibrium in this new world be? Well, if we're right and real growth goes up dramatically, say to that 6 to 8% range, but inflation keeps coming down, we could be back to an environment where long rates will be in a consistent way lower than short rates. Short rates might go up to that 6 to 8% range, but long rates, looking at the deflationary ramifications of innovation, long rates could be much lower, as they were during the 50-year period that ended in the Roaring '20s.
For the full interview, check the link in the description. Cathie Wood envisions a future where deregulation accelerates tech adoption, multi-omics drives medical breakthroughs, and Bitcoin becomes a cornerstone of modern finance. We'd love your thoughts on how reduced regulation could impact global innovation and how multi-omics and digital assets could reshape investment strategies. If you found this valuable, please like, comment, and subscribe to support expert insights from industry leaders. Stay tuned for more interviews on disruptive innovation and crypto evolution.